Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden meanings behind those massive corporate reports. And today we are diving into something that sounds a bit like a treasure hunt and a bit like a financial roller coaster, the FN Emerald Special Situations ETF. Get ready, because this report might just reveal some interesting shifts in how this fund plays the market. And before we go any further, if you love unearthing the real story behind the numbers, make sure you are subscribed. Also, we have a fantastic community forming on Discord, with the link right there in the description below. Come join the conversation. So, what are we looking at here? This is a certified shareholder report, the kind of document that tells investors what has been going on in their investment. It is for the FNI Emerald Special Situations, ETF, ticker symbol SPIT, and it covers the period ending the 31st of October 2025. Think of it as a financial check up for this particular investment fund. The big headline for this report is that the fund has undergone some pretty significant changes. Back on the 3rd of October 2025, Emerald Insights Fund essentially merged into this one. Plus, the fund is now operating as an actively managed exchange-traded fund, meaning managers are making decisions about what to buy and sell to try and meet its investment goals. They are aiming to invest at least 80% of their assets in companies that are going through unique situations and transformations, think mergers, reorganizations, or other big events. This is what they call special situations. And it sounds like it could be a wild ride. Now, let's talk about money, because that is usually what everyone wants to know. For a hypothetical investment of $10,000, the cost for the last 6 months were a pretty small $72. This works out to 1.11% of that investment. While it seems small, remember this is for a 6-month period and then gets annualized, so it gives you a sense of the ongoing expenses. Let's look at some key numbers as of the end of October 2025. The fund has about $19.1 million in net assets. That is the total value of everything the fund owns minus its liabilities. It holds 35 different investments. Interestingly, the net advisory fee is listed as $0. This might seem surprising, but often these fees are embedded within other expenses or paid in a different way. The portfolio turnover rate is 92%, which is quite high. This means the fund managers are actively buying and selling holdings, which can lead to higher trading costs, but also potentially more agile responses to market changes. So, where is this money going? The top sectors are healthcare at 20%, industrials at 14.2%, and technology at 11.5%. What's interesting is that a good chunk, 27.1%, is in cash and other. This could mean they are holding on to a lot of cash, perhaps waiting for the right opportunities in these special situations, or as a buffer against market volatility. Looking at the top 10 holdings, the biggest one by a significant margin is the FNI US Treasury 6-month bill ETF, making up 27% of the net assets. This is quite a contrast to the special situations focus. It suggests they are using safe, short-term government debt as a substantial part of their portfolio, likely for stability or liquidity. Following that, we see companies like Guardant Health Inc., Credo Technology Group Holding Limited, and Tetra Technologies Inc. These are the kinds of companies you might expect in a special situations fund, likely involved in areas with specific growth narratives or potential turnarounds. Now, let's drill down into those changes. We already mentioned the fund name change and reorganization. Emerald Insights Fund became part of this fund. The investment strategy is now clearly stated as an actively managed ETF focusing on those special situations, typically in equities. They are also facing some new risks due to this ETF structure and the nature of their investments. It also sounds like the leadership structure has changed, with FNM Investments now being the main advisor and Emerald acting as a sub-advisor. The fee structure has also been clarified. They have a unitary fee, meaning one overall fee, calculated at an annual rate of 0.89% of the fund's average net assets. This fee covers a lot of the operational costs. Let's move on to the financial statements themselves. Here is the schedule of investments, giving us a detailed look at what the fund holds. We see common stocks listed under various sectors. For basic materials, we have MP Materials Corp. In consumer discretionary, names like Genius Sports Limited and Arlo Technologies Inc. pop up. Under energy, we see Gola LNG Limited and Tetra Technologies Inc. Healthcare is a big area with investments in Acadia Pharmaceuticals Inc., Biogen Inc., and Guardant Health Inc. Industrials feature companies like Bloom Energy Corp. And Kratos Defense and Security Solutions Inc. Technology includes Broadcom Inc., Credo Technology Group Holding Limited, and MongoDB Inc. Telecommunications shows Lumentum Holdings, Inc. The total value of common stocks in the portfolio is over $13.9 million, with a cost of nearly $9.6 million. This shows a significant unrealized gain. Then we have exchange-traded funds, specifically the FETM US Treasury 6-month bill ETF, valued at over $5.1 million, with a cost of almost the same amount. This is the big holding we saw earlier. Putting it all together, the total investments are valued at just over $19.1 million, with a total cost of about $14.8 million. This means the fund has seen a substantial increase in the value of its holdings. Now, let's check out the statement of assets and liabilities. Net assets are $19,137,222, which matches our earlier figure. The liabilities are quite small, just over $9,000. This indicates a very healthy balance sheet for the fund. Moving to the statement of operations, this shows how the fund performed financially over the 6 months. Investment income, primarily from dividends and interest, was a bit over $32,000. However, the expenses were considerably higher, around $188,000. After some expense reimbursements, the net expenses came to about $110,000. This resulted in a net investment loss of approximately $77,900. But here is where things get interesting. The fund had a massive gain from realized and unrealized movements in its investments. Net realized gain was over $11.5 million, and there was a slight unrealized loss of about $2.4 million. The big picture, a net realized and unrealized gain of over $9 million. This huge gain is what turned a net investment loss into a substantial net increase in assets from operations of almost $9 million. The statements of changes in net assets paint a picture of what has happened with the fund's value and share count. For the 6 months ending the 31st of October 2025, the net assets increased by over $600,000. This increase is a combination of the operational gains, distributions to shareholders, and capital transactions like shares being bought or sold from the market. It is important to note that the report mentions a reorganization where the Emerald Insights Fund was acquired. This means that the performance and history of the predecessor fund are now part of this fund's story. Looking at the per share data in the financial highlights, the net asset value at the end of the period was $28.34. This is a significant jump from the beginning of the 6-month period when it was $19.56. The total return for this 6-month period was a very impressive 57.82%. This is largely driven by the massive gains in the underlying investments. The expense ratios are also worth noting. The ratio of expenses to average net assets after reimbursement is 1.11%. This aligns with what we saw earlier for the 6-month period. The ratio of net investment income to average net assets is negative, indicating a net investment loss as a percentage of assets, which is consistent with our earlier findings. The portfolio turnover rate for this 6-month period was 92%. This is quite high and suggests a very active trading strategy, which is a key characteristic of this fund's approach. Now let's dive into the notes to financial statements, which give us more context. The fund is organized under the RBB FUND, Inc., and operates as a series fund. A significant event was the reorganization on the 3rd of October 2025, where it acquired the Emerald Insights Fund. This means the historical performance of that fund is now rolled into this one. The fund values its investments at fair value, using market prices when available. When prices aren't readily available, they use other valuation methods, which is pretty standard for such funds. The report details how they classify their investments based on how their value is determined. Level 1 uses quoted prices in active markets for identical securities. Level 2 uses other observable inputs, and Level 3 uses unobservable inputs. For this fund, all its investments are classified as Level 1, meaning they are valued using readily available market prices for identical securities. That is a good sign for transparency. This section elaborates on their special situation strategy. It means they are looking for companies with specific events that could impact their value, not just general market trends. This can include mergers, acquisitions, restructurings, and other unique events. The risk here is that these special situations might not pan out as expected, leading to losses. Here we learn about the key players. FETM Investments, LLC is the investment advisor, and Emerald Mutual Fund Advisors. Trust is the sub-advisor. The unitary management fee is 0.89%, and this fee covers most of the fund's expenses, which is a simplified structure for investors. It's worth noting that before the reorganization, there were expense limits in place for different share classes. Now, with the unitary fee, it seems like a more streamlined approach. The report details purchases and sales of investment securities. For the period, they purchased over $18 million in securities and sold over $23 million. They also engaged in significant in-kind transactions, which is common for ETFs, where securities are exchanged rather than cash. This section details the tax implications for shareholders. It shows how distributions are characterized, which is important for tax planning. The fund's undistributed capital gains appear to be quite high, which could lead to future taxable distributions for shareholders if not managed carefully. This explains how shares are created and redeemed, mainly through creation units by authorized participants. For most retail investors, shares are bought and sold on the stock exchange. Similar to regular stocks, the fund now offers a single class of shares with no front-end sales load or redemption fee, which simplifies things. Here is an interesting part: transactions with affiliates. The FNUS Treasury 6-month bill ETF is listed as an affiliate. The fund holds a substantial amount of this ETF. This could raise questions about potential conflicts of interest, though regulatory rules are in place to manage these. The value of this holding at the end of the period is over $5.1 million. The fund has adopted a new accounting standard for reporting segment information. Since each series of the RBB fund operates as a single segment, this adoption likely has minimal impact on our understanding of this specific ETF's performance from an investor's perspective, as the chief operating decision maker monitors each fund separately. The management has evaluated subsequent events and found no significant ones that need to be disclosed or recognized in the financial statements beyond what is already reported. They also mentioned that a detailed schedule of investments is filed with the SEC quarterly. So if you want to see even more granular details than what is in this report, you can find it on the CC's website. This section provides a detailed account of the board's approval process for the new investment advisory and sub-advisory agreements. The board, including independent directors, carefully reviewed the qualifications, services, fees, and financial information of F&M Investments and Emerald Mutual Fund Advisors Trust. They considered factors like experience, investment philosophy, and profitability. The fact that they approved a unitary fee structure, where the advisor handles most expenses, was also a key point. Finally, the proxy voting results show that shareholders of the predecessor fund overwhelmingly approved the reorganization to merge into the F&M Emerald Special Situations ETF, with very few votes against it. This indicates strong shareholder support for the changes, so what is my take on all of this? This fund has clearly undergone a significant transformation. The merger and the shift to an actively managed special situations strategy bring both opportunities and risks. The high portfolio turnover and the substantial holding in US Treasury bills suggest a mixed strategy, perhaps aiming for growth through specific situations while maintaining a defensive core. The massive gains reported in this period are impressive, but investors need to understand that this type of strategy can be volatile. The sizable holding in an affiliated ETF is something to keep an eye on, though it appears to be handled within regulatory guidelines. Looking ahead, the success of this fund will heavily depend on how effectively the managers can identify and capitalize on truly unique special situations. While navigating the inherent risks, it is a strategy that can offer significant upside, but it demands careful monitoring. Alright, that is our deep dive into the F&M Emerald Special Situations, ETF's latest report. What do you think about their strategy and these results? Let me know in the comments below. If this analysis was helpful, hit that like button and subscribe for more corporate breakdowns. And remember, our Discord community is always buzzing with insights, so check that out in the description. Thanks for watching, and I'll see you next time on Corporate Decoder.